Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to go with you through SPRT and BBIG price action. Those two stocks are right now squeezing. So the questions we are having is how high can it go and why is it squeezing? Once we know why, we're going to be able to answer the question, how long is it going to last? So let's get into it. So in no particular order, let's start with SPRT. So here I'm going to show you guys how to combine technical analysis with analysis about volumes, market capitalization, short interest, everything. And we're going to see how we find the targets and what we do here. So, all right, we start with SPRT. So we are going to use Elliott wave theory. So I know what you guys are going to tell me. You're going to tell me, yeah, but during a squeeze, this is not working at all. Wrong. It's working very well. Why? Because actually those theories have been built based on emotions of investors, and there is no better place for emotion than a squeeze. All right. A small thing that I want to show you is look, for example, at the volumes traded. So we have here around 100 million shares, even 160 million shares traded one day, then 100 million. Look at the market cap, guys. Up. So SPRT, the outstanding number of shares is 24 million. So it's basically traded a few times the float share. So do you think, and the shorts are, bam, so let's check the shorts. So this is my synthetic short spreadsheet. I here retrieve all the information about the option market. I then check what is the current exposure using the delta associated to each option, and I check what is the maximum synthetic short, which is when the call options are all in the money. This is giving me information about the gamma, which is the difference between the exposure market makers having now and the exposure they would have if the price goes higher. And whenever this gamma is huge, I know that there's going to be bullish momentum on the upside. Here for SPRT, we're having 65% of short interest. And we can go up to 90%, guys, all right? So the total short is, and we have 25% of regular short, which is a lot as well. So for now, the total short is 65 plus 25, so 90%, and it can go up to 115%, all right? So this is the first very interesting information. So there are roughly 25 million shares short in this market. So whenever you see that the volume traded is 100 million, it means that it's not only shorts covering, all right, it's everybody buying and selling. You know, there is a lot of scalping in this kind of environment. So this is the reason why technical analysis applies actually very well, and I'm going to show you what we have already did and what we will keep doing on my Discord. So first, what is interesting once you have this data is to see where this synthetic short is coming from. So here you can see right away the green cells are the big ones. So here I have October 15th, September. So I have roughly two that are big. So October and September. And what is on the upside? 30 and 20. All right. So 20 is on the downside. Okay. So this won't create gamma on the upside. So the gamma comes from here. So we have until the 17th of September. Until the 17th of September, market makers are going to be under pressure. So this is one first very good information. And we have roughly 23% difference between the synthetic short now and the synthetic short if all the call options are in the money. So basically above 30, which we are. So they're going to keep buying. Even when the time is just passing, this is converging towards a delta 1. Right now, the delta of this is 67%. Okay, and if time passes, this is going to converge to 1. So every day, market makers are going to buy shares. First information. Now, we going back to the chart. So this is the first thing I wanted to show you. Where is the synthetic short coming from? To know for how long it's going to last, and to show you that everybody is getting into this trade, all right? Which is the reason why technical analysis is very helpful. So here, the first thing you do, we're going to first start to apply Elliott wave theory. So we need to find 5 waves. So if you don't know where to start, you just take a big move. So here, definitely we have one, and you start from here and you try to count 5 waves. You need to find the beginning of a cycle. So here I have clearly a beginning of a cycle. Okay. So this is a 1, 2, 3, 4, 5. All right. Then I'm going to show you how to find targets, but first we build our countings. So if this is one wave, maybe not complete, I'm trying to find the next one. Okay, 1, 2, 3, 4, 5. Okay, and then here we have a larger one. Okay, so I'm going to put it in yellow. But for now, we're wondering. So we have two information here. Is that most likely we will go higher. I'm going to show you the targets. And second one is that then there's going to be a pullback, probably lasting longer, maybe a few months, and then maybe one more wave up. So for now, we are not sure of anything, but the first thing we want to know is how high this can go right now. So here is my answer. I'm going to here try to apply Fibonacci projections that actually work very well in this type of environment. So you measure 1 plus 3. Sorry, not in this one. We are here on the daily, so we're gonna zoom in. So we are here, bam, bam, in what seems to be a fifth wave, and we wonder how high this fifth wave can go. So we do the same thing, all right, again. So here in this fifth wave, so here you have the fourth, all right, and the fifth is starting here, guys. So 1, 2, 3, 4, 5. Okay, bam, I'm gonna put this. So now we're starting to have some very interesting information, because we can see that in this fifth wave, so it's probably the last wave before a correction, and no surprise, it's probably going to arrive around the 17th of September. And we are wondering what is the target for this. So we measure 1 plus 3 and we apply it to the bottom of the force. All right. Once again, guys, this is coming from here. You just type Elliott wave, bam, you go in the PDF and you go to the 17.9 page, if I remember well. Bam. All right. Here you have everything. Basically, all the interesting information of this book is here, guys. So for those who are lazy to read everything, just go to this page. And here we have a lot of information. So the fifth wave is usually equal to 0.618 or 1.618 times 1 plus 3. So this is the first thing we're going to apply. The 0.618 is going to 58, so it's not possible because we have already reached this level. So we go to the next one. So the first information we get from this is that the target for early September is 110. So I'm not saying we're going to go there for sure. I'm saying that if we push higher and we saw that we have some room for market makers to buy, so it's for me likely that this happens, then we're going to find resistance and profit takings around this level. All right. So this is, I think, a very good information. And then we probably going to have a correction. I mean, this would be another story. As far as I'm concerned, I'm here. I posted an alert on my Discord 2 days ago and yesterday. I'm a buyer here, so I bought around at the 30 level, but very small quantity. I'm a heavier buyer lower. If we go a bit lower, you can see that here the 50 period is acting as support. So we might not go lower, but you know, you can start to invest here a little bit. And once again, we have targets around 110. Now, second one, very interesting, BBIG, guys. So what do we have here? So same thing. We are going to try to find a move and split it into 5 waves. And guys, this is pretty obvious here, right? So 1, 2, 3, 4, 5. Actually, it's not that obvious. You have many countings you can make. We don't know if it's 1, 2, 3 or if it's 1, 2. Which would push much higher. But this is to me the best counting, all right? And here, once again, guys, I posted this yesterday. So I'm going to show you first how to enter this kind of moves. You first need to spot whenever a wave is finished. On my Discord on Monday, everybody's on Friday. I posted an alert here around 4 because I saw the breakout here and I saw the massive synthetic short. So it was looking like this would squeeze harder, which happened. Then I was saying here, take profits around 7.75 and 11. So in this area, a lot of people did, which is very good. And then people were asking me on Monday, oh, should I get in? Should I get in? What level should we buy? And I was just saying, wait, because we had no information at this time. We needed to see where is the top of the third. Once we know that this wave is complete, so here, for example, you have a breakout that tells you that it's complete, then you have a lot of information. You, for example, know the length of the third, so you're going to apply this. You know you're in the fourth wave, all right, 1, 2, 3, 4. So you know that most likely you will correct to 38.2% of wave 3. This is what is written here, 38.2 times 3, so 4 equals this. The reality, this is the book written 20 years ago, the reality is that even fourth waves, they usually go to the 61.8% retracement, just like second waves. This is what I'm seeing. So that's why I posted an order. I measured this wave. And here I was saying that we can try to enter using fibs. All right. It was here, guys. So squeeze alerts. And this is what I posted, guys, when we were at 7:30. Once I knew that we completed the third wave, I posted buy 6:30, then buy again 5:50, and stop loss at 480. This is not financial advice. This is just what I would do and that I'm sharing with you guys here and on my Discord, because I think that this knowledge that I acquired during my trading career is to be passed. I want to share everything I know with you guys, and I really enjoy that, you know, it can be helpful for others. So here what we are having, so 635, the 50%, 550, the 61.8% retracement. So here we got executed on our first order. We didn't get executed on the second one, just for a little. It went to 554. We had an order placed at 550. So we didn't get executed here, but we got executed a bit higher. Now, in terms of targets, so we are in the trade, we are happy. Now, in terms of target, where could it go? So guys, same thing. All right, you measure 1 plus 3, you apply it to the bottom of the force, and this gives you targets. So you have the 1-to-1 or the 1-to-1.618. That are levels that usually happen. So here I would say 18. All right, this is an ambitious target, but that is realistic to me. We of course have resistance at 11. That's why what we're doing on my Discord, actually, we are so managing two portfolios, one with aggressive orders, another one with conservative orders. We sometimes take the same stock in both portfolios and we share everything with you guys. The difference is that for aggressive orders, we have tighter stop losses and we have higher targets. So here we're gonna put this trade in both portfolio. I think for now we only put it in the aggressive portfolio, so the target is gonna be around 18, and I think that this target is achievable. Once again, why am I bullish here, guys? You check the synthetic short interest and it's absolutely massive, massive, massive. Look at that, guys. Bam, bam, bam. Give it some time. It's computing. So once again, what is going to be very interesting here is to check where this synthetic short is coming from. Once you get this information, you are able to know what are going to be the dynamics of the market until this position expires. And you can also check if you have some, wow, 95%. All right, guys. So we are increasing more and more here. We were at 60% 2 days ago. So we are just going higher and higher. So this is another pressure that market makers are going to have, and that they're going to probably try to buy shares whenever they have a dip. So that's why I think that buying the dip on BBIG is a good idea. This is what most market makers would probably do as they are short. So here, where is it coming from? Same thing, guys. We just open it and we look for the greens. So here we have a green, here we have a green. Bam, bam, bam. So you have a lot, but basically they're coming from September. Okay, so most of it comes from here. The biggest one is this one, so 7.5, so we are on it. But we have this one and this one. So the upside, oh, and we have an October. So you see, this stuff might actually continue until October because I have more options on October than I had on the SPRT. So a lot of people bought 10 strike calls October maturity and 30. 11.5, and what else do I have here? So at least, you know, September and yeah, and October. So those are our time targets, you know, for the levels to be reached. So let's see how things actually develop. Where are we? We're here. So imagine we go right away to the targets. Then how is it going to look? Yeah, we might have, you know, something like this, guys. All right. And then a 1, 2, 3, 4, 5. It's possible as well. So we're going to analyze later what is happening. But probably if this finishes around 18, then pulls back. Okay. So this is a very long shot. I'm just doing this right now with you. But I think that here a lot of people will be buying the dip. And this is going to be maybe another opportunity to enter this trade. But we are not there yet. For now, let's see how high we can go for this first wave. It's only a first wave. And depending on where we go, we're going to use again FIBs, you know, same techniques. And I'm going to share everything with you guys to enter. You know, this is going to be a second wave. So probably, let's say we go to 18, it's probably going to correct to the 8th level. So this is going to be another buying opportunity. So I hope you guys enjoyed this video. I hope I managed to explain how I actually set up my trades, how I analyze the market, how I use the option market as an indicator of potential squeezes and when they could potentially happen. And if you did enjoy this video, guys, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.